Hi, everyone, and welcome to the Childcare Business Podcast. My name is Leah Woodbury, and I am so happy to have you all join us today. For this episode, we are thrilled to have Michael Blanco with us. His expertise in finance and childcare is something that we don't often see. So let me give you a quick overview of his resume. He's a former IRS agent. He is a licensed Florida CPA with more than 20 years of experience in audit, tax, and strategic advisory. And he's the second generation owner of several preschools, the Blanco family of schools. He's also the principal at Blanco CPA, a boutique accounting firm, and chief executive officer of Radius Childcare Solutions. Welcome, Michael.
Hi, Leah. My pleasure to be here.
All right, so we like to start these podcasts by getting a little bit of background on our guests. Can you tell us how you became involved in ECE and accounting and ended up combining those career paths?
Absolutely. So it started with my dad. My dad was an entrepreneur, and he was in the medical business. And in 1992, he purchased his first center, and it was more of they use the term side hustle then, like we use now. So that was his that it was purely an investment because my dad, like me, we enjoy working with families. We enjoy working with children, and essentially that's how it started. We enjoy the business as the education component of it. So I grew up in the early child care world as a not as an from an educator's point of view, or not in a center's point of view, but as an investor in the business. And I grew up in it. I've done all the jobs that one would do in a center. And then my father passed away about 11 years ago. So I took over the business and grew it since. And I am a Florida CPA with clients both on the tax side, accounting side, and we have a focus in the preschool and the early child care market because I understand the business. We understand the business, and we enjoy working with parents and teachers and educators and lending that hand of tax and accounting, providing that advice as someone that's not only as an operator, but someone who can provide tax and accounting advice to other owners.
Okay. So let's jump in. We're going to try to cover a lot of ground in this podcast. So what we hear a lot at ProCare Solutions is that most people who get into childcare and ECE did not do it because they love accounting. So they're maybe not quite like you.
Yeah.
So how do owners without a business background get started on a solid financial footing, or maybe find that footing if they've been in business for a while?
I've been, this is a great question. And I think it's, and it's a similar question that one would ask if you were going to get into the early childcare business in and of itself. And to get into that business of itself, there's licensing requirements, there's ratio requirements, there's education requirements, there's back office requirements, there's HR requirements. There's a slew of requirements that go into operating a center. And but this neglected piece of this financial footing is a component that business owners need to get educated on. And what I would say to owners is that they're not alone. So the same issues that early childhood educators and owners face, other business owners face as well. So in that sense, the problem is relatable. And what I would urge them to do is they need to get educated on what the financial process is, and really it's getting educated on what the language of business is. So just like they're educated already and how to operate a center and all the requirements that goes into that, they need to become at least fluent in what the language of business, and that is accounting. How can they do that? They can either get professional help. So there's accredited bookkeepers. You can find there's CPAs, there's enrolled agents. Find someone who understands accounting, and ideally someone who understands either education or specifically the early child care market. So here at Radius, shameless plug, but this is what we do. So we only do accounting and tax for the early child care market. So we understand that business, but it doesn't necessarily have to be us. You could find someone in your local market that understands it as well. Another time is another way that they can find themselves on footing is industry groups. So the variety of industry groups that serve the profession, they provide accounting and financial literacy to its members. So I don't know. Can I mention NACI?
Please do.
Oh,
We love
oh,
Macy.
okay.
We
Oh,
love
okay.
Macy.
So I'm going to be having a presentation on exactly this topic at the upcoming NACI conference. So I encourage attendees if they come in and come out. I'm going to be speaking about exactly this topic. Uh, Community colleges. There's a slew of online resources available, and it's and because it's so important, you need to understand what a balance sheet is. You need to understand an income statement. You need to be able to understand what a statement of cash flows are, what debits and credits are, what a bank reconciliation is. So those different pieces is how you and what's involved is that. And then finally, the last piece to get on solid footing is really to track every dollar using starting on the front end, so using a system like Procare to track enrollment and registration and billings, and then combining that with an accounting software is whether it's cloud-based, whether it's desktop, and using it effectively is really where the rubber meets the road. A lot of times you see folks using, pencil and paper, using ledger paper, or even Excel, and it's not to knock it, but it's very complicated. Yes, it can be done, and yes, it will work, but it's not time friendly. It's a lift, especially for the non-accountants in the world. So with being in the world of early childhood education, there's a lot of demands for our time, from staffing to enrollment to tours to families to just the day-to-day running the classroom. And then you're going to keep track of your accounting in Excel or like ledger paper. It's just not realistic, and we see it. We meet groups all the time that unfortunately are still there. That piece needs a little bit of work. So that would be the last piece that I would say is um, that what they could do to get on more solid ground.
And we see when we're talking to centers who aren't using any software that they're still accepting cash or checks. And
Yeah,
the cash thing always kind of makes me nervous. But
yeah,
I mean, storing it and going to the bank and
yeah.
the amount of time. Yeah, I totally
I,
get it.
I don't remember what the year was that we said no more cash, but it's been a while. It's been over a decade since we stopped no more cash. But my concern was the same as well, the same as you. I mean, we had at one of our centers, we had, I don't know, we had 200 something children paying cash weekly, and about 60% of those families were cash or check. So 40% was through Procare, 60% was cash or check, and then probably call it maybe 50-50 was cash versus check. And it was, I mean, it was regularly where I would show up with a deposit to the bank, and I would exceed the $10,000 limit, and it would add so much time, just the paper, the work of that. And this was years ago, so it's like having that much cash. Yeah, and then the accounting aspect of it too. So like keeping track of what families owe what and how long they owe it to you for, and application of payments and oh, but little Bobby needs a t-shirt added to their account and did they pay the $17 for that t-shirt? There, just all of that. If you're doing it outside of a formal system, the time toll really adds up.
Yeah, that sounds messy. So let's move on to spotting red flags, which is something that you're really good at. I would say that
Yeah.
I'm guessing you're saying cash might be one of those. Um, but what are the biggest red flags in a childcare business's finances?
So on the topic of cash, what first comes to mind is your accounts receivable, your aging. So we see a number of centers that we work with, they're the visibility into who owes what and how long is that are those monies outstanding for. Another red flag is what percentage payroll is of total revenue. So if we see payroll more than 60% of enrollment fees collected, it's already on a bad trajectory. So then you could dig into, well, who's in the on the payroll and is the compensation fair and all that? And is that possibly skewing the numbers? But that's a good place to start. Another red flag is tuition keeping pace with costs. So we've seen a just this really uptick in insurance, cost of wages, cost of labor, and just the operating expenses period to operate a center. And it comes from a good place in that operators, because they are working with the families, they hesitate to raise their cost, they raise their tuition because their relationship is so close, and that gets in the way of making a decision to raising tuition. But all your vendors have already raised your prices, and if you're not keeping pace with them, you're quickly going to be in a cash crunch. Uh, Also, not having cash reserves. So a good standard, a solid standard is $1 of cash for $1 of what current liabilities are. So if you're gonna spend $100 in the next 12 months, you have at least $100 in cash in those reserves as a projected liability. It could also be 2 to 1. That is the gold standard. So seeing, do you have enough cash reserves to cover your commitments? And just even really basic is, are you reconciling your accounts on time, and are you reviewing your financials? We as preschool owners and operators, there's so many things that are routine, from the time we open to the time we sing the national anthem, to the time with the kids nap, to pick up. And there's so many things that are programmed during the day, but a lot of owners fall short of, are they programming time to review their financials, review their budget, review their bank reconciliations, and the lack of that is in itself a red flag, because you're not seeing these signs that are there. And that goes back to what about getting on a solid financial footing is, well, do you understand what you're reading? And anyone who's in business, or even directors who are responsible essentially for a profit and loss, but whether their center is an individual profit and loss, they need to understand what these financials mean. And what I tell whether directors and owners is, a lot of times, just like other professions, whether it's dentists, physicians, educators are no different, in that you weren't given a course on how to read and interpret this. And unless you go and seek it out, you're not going to understand or you go through it the hard way, you're not going to understand what you're reading to be able to interpret it and to take uh, proactive decisions about it.
Okay, and this might be this might be the hard part, I would think. How do you find those red flags before they become a big deal, where they're not sneaking up and everything was fine yesterday and today not so much.
Not so
Not so
much.
much.
So a good way to find a red flag is to well, apart from getting the education and understanding what it is that you're reading, so many times an owner or a center director will trust a bookkeeper to do bookkeeping and accounting, but that work isn't being checked. So, and for an example, like you can play accounting games, so to speak, by you can project on a balance sheet that the finances are good, that cash is great, but that is a but it can be overrode by through accounting games. So if you are forcing something on a bank reconciliation, it could paint a more rosier picture than what is actually happening. So that goes back to reviewing your financials. So regularly schedule time to sit down with the professional who is doing this work, whether it's the bookkeeper, whoever is doing this work, looking and checking their work. And checking their work means looking at a balance sheet, looking at an income statement, looking at bank reconciliations, and looking at dates. Dates are very important on transactions, and transactions should not be stale. So, for example, if you're looking at a bank reconciliation, typically you will not see anything more than 60 days, 90 days max. If you see something more than 90 days on a bank reconciliation, you need to dig in and say, why is that? Why is that there? uh, Regular monthly reviews. So it's sitting down with making part of the workflow, reviewing budgeted financials to actual. So we anticipated that we were going to make $1,000 this week, and we made $1,000, or we made $1,100, or we made $900. And then what caused that change? Why did we expect one thing and then something else? Why was there a difference? The same on the expense side. We in one of my own centers, I caught a water leak because when I was looking at my utilities bill, my utilities line item, I noticed my water bill doubled, and the problem was actually underground. It was beneath the concrete slab, and I effectively had a water leak. And we see that time and time again with the centers that we work with. When they begin tracking things like food costs, when you begin tracking and monitoring things like labor costs, you really start to identify trends that can be very expensive over time, like over ordering on centers that provide food, or in the overtime sense of, well, or how much overtime can be very expensive. It can be a red flag, right? And then also just your aging, your billing, your tuition. By making part of the process, reviewing your billings and looking at your accounts receivable aging, and seeing what portion of your tuition has not been collected and how long has it been outstanding. It allows management to find a solution to resolve that, and making that really part of the process. Another is monitoring key metrics. So this is really it's I guess it's a lot of, you see a lot on the social media posts and whatnot, like, oh, KPIs, KPIs, KPIs. So key performance indicators, and that's really the goal. And but you cannot have a key performance indicator if your inputs are not accurate. So if your financials and your center management system, ProCare, is not, if the data that's coming from the accounting cannot be applied to your enrollment information, then you don't have a good KPI. So we use, for example, ProCare to track our enrollment. We track our tuition, and we know to the exact number of children, to the exact number of buildings, and then we can compare that to, for example, the cost of our marketing spend, to see what exactly are our customer acquisition costs. But but if you don't have solid data, your KPIs can fall apart, and that's why a ProCare and an accounting software and tracking every dollar, when you marry the two, it really becomes a chorus, so to speak.
Well, that was going to be my next question. Like, how can a childcare management software help those owners who aren't as business savvy as perhaps they would like to be or should
Yeah.
be in doing that?
Oh, absolutely. So something like a ProCare, it automates the tuition, the billing, and the collections process. So we use it for that. We use it for time and attendance. We use it for communicating with parents. We use it to centralize records. We use it to track time, track the number of children that we have on center, on property at any given time, and having a hub that is one central platform that does all of that is really where the value is. And yeah, sure, you could use an accounting software, or sure, you could print out invoices and give it to parents and all that. But the time that that requires to do that, it's not an efficient resource, and especially in an industry like early ed, where it's really a cost control business. You need to keep an eye on costs, and the time that owners and directors spend chasing down administrative matters, whether it's accounting or doing billing. We don't have the luxury of having a billing clerk on staff to say, hey, I'm just gonna wave a wand and you're gonna do billing and collections for me. No, it's incumbent upon us as the owners and operators to do things in the most efficient manner. And if you do have somebody like that on your task, what are your margins like? Are you effectively running a center that's going to be open in the next 5 years to the families in your community? Probably not. And it comes back to this doing things as efficient and effectively as possible. And that's how a childcare management software really shines.
Agree. So let's shift to budgeting. So let's say a childcare owner has found those red flags. So now it's time to build or maybe redo that budget.
Mm,
What are the biggest mistakes you see when a center does build that budget or takes a
yeah.
look and wants to redo it?
Absolutely. The largest mistake is treating a budget as set it and forget it. So meaning that a budget that you created 10 years ago when you attended ABC conference or so-and-so class at a community college because they told you to do a budget, and they're using that same budget as how they're operating their center by. Budgets are living, breathing, dynamic tools that need to change over time. And in an ideal world, you're using your budget by the season. So a typical center has lower enrollment in the summer when kids and families are traveling, and then enrollment peaks during the fall and the spring uh, timeframe. So that's where the your budget would change and vary based on the expansion or contraction of the center. Also, just looking back over the last 5 years, the run on what the cost of labor is or has been, if you're using percentages or rates as your cost of labor, you need that were 5 years or 3 years old, they need to reflect the current environment. Also, when kind of digging into the labor piece a bit, given that many of the centers are operating short staffed, well, are you factoring in overtime? So what does your budget include that shortfall of staff? Also, forgetting to include repairs and maintenance. So some centers are uh, they operate in older buildings. One of my centers is operates in a building that's 50 plus years old. So we spend more money there than on a center that's in a newer building, just because of the repairs and maintenance, and we budget accordingly for that. Another one is not building in a line item for taxes or reserves. A lot of owners forget that taxes are their their largest expense when you look at them individually, and when you look at what the percentage that tax is of the business, it's usually the third or fourth largest expense of a center. So not factoring that in and accounting for it appropriately, not factoring in for payroll taxes is another one, and also factoring in for reserves. So reserves can cover a whole slew of things, but factoring that in for playground, for improvements to a center, uh, possibly new construction, an expansion, uh, a whole variety of things that reserves can come into play uh, for a rainy day. So when looking at budgeting, those are typically the mistakes that center owners make.
Yeah, it is wild the cost of playground equipment. I was just
Oh
looking
my
at
goodness.
not too long ago.
Yeah. It's
I'm
it's a
shocked.
you could spend a fortune. Yeah. Yeah, absolutely.
Yeah. So, for someone who's never built a budget, can you walk us through some simple steps for how to do that for a complete novice?
Yeah, sure. So I like to make things into steps and I'm gonna try to put it on my hand as simple as possible. So 5 steps. Step one, list all sources of income. So this and try to be as detailed as possible. So we're looking at tuition, registration, grants, food program monies, any and all income is step one. Step two is fixed costs. So a lot of people get stuck in on this one. In what are fixed costs? Fixed costs are costs that don't change in relation to volume. So whether you have one child or you have 100, pretty much your cost is the same. And that are things like rent, insurance, these fixed costs that remain really consistent over time. Step three is your variable costs. So this is things like staffing, uh, food, supplies. These expenses change in direct relation to volume. So if you have in a center that has 100 children, if you have and it's new, you have 10 children, the cost of the staffing and the food and the supplies is different than if you had 100. And really being granular with that, with what that cost is, it is very important. Step four would be adding a line item for savings. We just talked about reserves. This rainy day, uh, adding that cushion also it allows for when you're projecting your budget, it's not going to be 100% accurate, and it could allow for variation in fixed costs, changes in tuition, or changes in variable costs. So this step four really adds in a layer for that mistake factor of how the situation may change month to month, day to day. And then five, the fifth step is to compare your break-even point and say, okay, what is the what is the minimum amount of children that I we need to cover these costs, and that is a number. And when you're handling your marketing, when you're handling your budgets, keeping in mind that particular break-even point, and that then dictates the rest of the analysis, and then say, well, how am I doing in comparison to that break-even point? So, did we exceed expectations or did we fall short? And then why? So you could dig into your uh, looking at from an expense point of view. Well, where did we spend more? Where did we spend less? And why? And then finally, looking at it also on the tuition side. Well, tuition was, and other monies we received was greater versus less. And then once you have those 5 steps, it really allows you to look and say, well, what changed and what caused it and why.
Well, we just covered a lot of ground in a little more than a half hour.
Eh,
Did we miss anything? Is there anything that I should have asked you and I didn't, or that you'd like people to take away from this podcast?
Yeah, I think that the one thing that I would urge preschool owners, operators, directors, and really just the early ed market is really going in on this financial literacy. And it's there's while we're in the topic of the business of childcare, there's a number of, well, doing things that are proactive with using the tax code. And that's essentially the reason why I love and I'm so passionate about tax is, well, you can organize your businesses and your affairs to be more tax friendly than had you not planned. And because we're in this particular market of that is usually really is real estate intensive, or there's a lot of improvements that one would have to make to a structure. There's things that there's an opportunity for tax planning, such as depreciation, bonus depreciation, setting up retirement plans. There's a number of once you become this once you enhance your understanding of your financial affairs, you can really plan accordingly to minimize that cost or that expense, and that expense is taxes. So I think it's really incumbent on just from an owner, from an investor point of view. Well, how can you organize your affairs to pay the least amount of taxes possible legally, of course, and also while growing your business and having an enterprise that develops value over time, that that when you decide to either retire or uh, to hand over the reins to the next generation, it's a beautiful asset that's worth carrying on, or a beautiful asset that can generate a lot of value to another buyer, another investor, that can allow owners to do something with it. And it's really become, I would urge owners to become strategic in how they operate their centers, and using uh, something like a ProCare to optimize billing, using an accounting software to keep track of accounting, to be able to have those reports, and really being focused on the business, so that it's an investment and a thing of value that can really be significant over time.
Well, Michael, thank you so much for coming today and sharing those tips. Could you share where our listeners can find out more about what you do, website, that kind of thing?
Oh, absolutely. So our audience, or I'm sorry, your audience can go to, we can edit that out, go to radiuschildcaresolutions.com. So radiuschildcaresolutions.com. You can also connect with me on LinkedIn at Michael Blanco CPA, up there as well. And also I'll be at the upcoming NACE conference, and I'd love to chat with more of your users.
Wonderful. All right. Well, and thank you to everybody who joined us today. From all of us here at ProCare Solutions, and from myself as a working mom who relied on childcare for many years. Thank you for the important work that you're doing to nurture and educate the little ones out there. And we hope to see you next time on a future podcast. And we hope you can join us on some of our webinars as well. Have a great day, everybody.